Hello, everyone. Welcome to the Market Breadth. And today is an exciting day. It's my favorite time of the year or season, however you want to call it. The market is toying around with oversold conditions and trading opportunities abound when this happens. Yesterday, I wrote on my blog, drduru.com/122, that the market finally hit official oversold conditions. I define that as when this indicator, the percent of stocks above their 50-day moving average, breaks below the 20% level. I call this AT50 for above the 50. And so I've specialized in this cyclical indicator, trading from oversold to overbought extremes. So now we're at the oversold extreme. And what was interesting when I checked out this indicator, my favorite technical indicator, by the way, is that it gapped up. And I was like, whoa, that's pretty dramatic because the market didn't really feel like it had a huge rebound. So technically the market's it's already doing an oversold bounce. So this is day one of the bounce. And so first thing I do, of course, is I check out the S&P 500. And when I do that, I see that, there's part of what's going on is that the market sold off intraday. You can see it was about wow, over 30-point move downwards on the S&P 500. And then it rebounded to basically a flat close. That created what's known in technical analysis as a hammer candlestick. Hammer, this kind of looks like the head, and here's kind of the handle of the hammer. And the reason why a hammer is significant is because it signifies the potential end of a downtrend. And we have definitely had a downtrend in September. If you remember correctly, there was this fake rebound or fake rally at the end of August, topped out right at the first day of the month. And, there was this another fake tranquil period in here, and then we just fell like a rock. So I cover that in my blog, drdrew.com/122. But we're here to talk about how to use Swingtradebot to identify some new trading opportunities after a candlestick has been made. And again, this this pattern is particularly significant, particularly powerful, given that the market is at or near oversold conditions. This could be a major bottom. There's no guarantees, but I think the odds favor a short-term bottom that's tradable to the long side. So of course, now let's go to Swingtradebot. As a reminder, I'm a subscriber, so not everything I do here you can do on the free version. First thing to do is check out the general market overview, confirm that Swingtradebot also thinks that a hammer was made, and sure enough, excuse me, on the S&P 500, it indeed, hammer candlestick is one of the signals that got triggered today. And as further confirmation, the even broader index, the Wilshire 5000, also created a hammer candlestick. So that tells me that this should be a very interesting indicator to check out. So I'm going to skip all the other key indicators on here. You can go to the general stock market recap for free if you like. I click on hammer candlestick and see how many candidates there are. So without any filtering, I just scroll down really quickly. I see, whoa, 17 pages. That's far too much. So let me filter this down because I really want a focused set of stocks that will provide me a very good opportunity to find strong stuff. So one of the first things I want to do is create a minimum price of 10. My minimum average volume, obviously zero is too low. Let me just go to 50,000. Don't want to lower that, bring that up too much. And then I do my find stocks. And let's go ahead and take a look at how many got filtered out this time. So now we're down to 7. That's manageable. Now, one thing I want to make sure is I don't catch ETFs. I'm not really interested in ETFs right now. I want to look at individual stocks. Note here, this is something that I've been overlooking for a while. This blue bar here shows you additional filter criteria. It says reveal more scan criteria below. So it's not below the bar, but you click the bar and then you see the filter criteria below. There's a lot of different things you can do here. I'm going to have to do a separate tutorial on these filters here versus the moving day averages, because I love to do things like looking for stuff that's near important moving averages. But for now, the only thing I want to do is filter out ETFs. So you can see right now the filter is set to both stocks and ETFs. I only want stocks. So I click on that, and now I hit my find stocks. And let's look below. Voila, we're now down to just 2 pages of stocks that may hit a clear candlestick. As you know, I like to review these using the as chart so I can get a very quick visual. And let's see if I can go through this really quickly. Some of these will be hard to see because if they're down here towards the volume bars, you're not going to see the hammer. I like to pick stocks that are at or near important moving averages. So for instance, this one is not a good candidate because it's just in a downtrend and there's no natural support that I can see, except for maybe, this previous low down here. But I'm going to skip FND. It's a consumer cyclical, and that's not a good place to be right now at this juncture of the market anyway. Meta is pretty interesting. I mean, this is a very long candle. I'm going to put it on a list, but I'm only going to buy it after it goes above the 50-day moving average. You see how it stopped right at resistance there? So I need buyers to convince me by moving up a little higher. I'll add it to my watch list. I'll add it to the bullish swing. I'll make a note that this was a hammer. And save, and now it's in my bullish swing watch list. So let's keep going down the list here. CBRE is a real estate. I'm leaving those alone. Real estate and financials. AXTA. The problem I have here is I don't see any natural support or technical moving average. The same problem with ALE. ALTR could be interesting because it's tested this low here. Let me go ahead and add it. It's probably not something I'm going to trade, but let me just go ahead and add it so I can just keep an eye on it tomorrow. Let's keep going down the list really quickly. Financials I don't like. Vail, that's pretty interesting. Look at that, right at the 50-day moving average. So that definitely goes on my list. And I remember Vail was in the news recently. I can't remember. So after this, I'm going to check out what's been going on with Vail recently. Vail Resorts, MTN. This one I don't like. There's no natural support that I can trade off of here. Nomad Foods, the same thing. T. Rowe Price, financials, skipping that. UPS, oh, that's interesting, given FedEx is one that I talked about before being bullish because it was already over the 50-day moving average. But UPS is just in this long unbroken downtrend, and I don't really like to add that kind of stuff. Walmart's interesting because it's been so strong. Look at that. It jumped right off of the 50-day moving average. Let me just go ahead and add that to the list just because it's been so strong, and that's a perfect bounce off the 50-day moving average. If it were lower, I would be more comfortable. Lower just meaning lower in price relative to the other high. There's not a lot of upside, but still, strong stock, got to put on the list. This is a copper company, SCCO. Again, no natural support around here, so I don't want to really mess around with that. There's stronger candidates. STM, semiconductors. I don't see a great line of support. I'll skip that one. Oh, yeah, Walgreens. Oh, this is just an awful stock. I got caught in this trying to play it for the dividend. I definitely wouldn't trade this on a short-term basis. Comerica, financials, not interested. ESGRP. Sometimes on these scans, hammers and other patterns will show up that don't really meet the criteria, meaning that the hammer is signifying the end of some kind of significant downtrend. I wouldn't call this a significant downtrend, so I don't really see much to trade there unless this qualifies for some other scan. DK, yeah, it's the 20-day moving average. Not a lot up there. I'll just go ahead and skip that. Oh, and it's energy and oil anyway. I'm not putting those on the list. CMPR, again, this is not a hammer at the end of a nice downtrend, so nothing to trade there for me. Let's go next. I'm going to go a little faster here. DHR equal LYS. Just really quickly, I would skip MasterCard as a financial anyway, but the other thing not to like here is this breakdown below the 50-day moving average and no near really good support level for this candlestick to build momentum from. TXN, Texas Instruments, don't like that one. Hopefully you can see why. PGR, Financial Services, no. Oracle, I'm in this one for a long term. Boy, did it fool me. Look at this dangerous looking potential double top. And, the earnings, we went from one great earnings report to an awful one. And now the selling has continued. So I think Oracle is topped out for now. I'm just going to have to stay patient for a good while. IHG, consumer cyclical, so that's dangerous. No natural support here. ABBV, no. CRL, no. DOV, no. IBM, that's interesting because it's scraping right at the 50-day moving average, but I don't really like to mess around with IBM anyway. Too old school. I know it's been trending up really well recently and actually outperformed the market recently, but I just think this is a fake out. It'll go back to underperforming within a few months or so. And Skyworks, I can skip. GNTX, not too interesting, just chopping around there. PTC, hopefully you can tell why I'm not putting that on the list. Microchip, that hammer is not that significant to me. Neither is HSBC. It's a financial anyway. Knife River Holding, never heard of this one. Chart's not that great, but I'm gonna make a mental note to check out this one because it's in building materials. Surprised I never heard of this stock. In fact, let me just go ahead and put it on my bull list so I remember to look that one up. I like the materials spaces, particularly for building and construction. Boeing, I think you can tell why I won't put this on my list. Gosh, I wish I went short a while back. Blueprint Medicines Corporation, haven't heard of this one. BPMC, but it's biotech, too dangerous in this kind of environment. UNM, financial services, you can tell why I don't want that one. And let's go to the last page. Hopefully you're still with me. You could tell why I don't want CCU. You could tell why I don't want OLK. Juniper is a stock I'm already in for the long term. I don't think this is much of a tradable hammer. Depends upon your risk tolerance. It could be low enough to this natural support from the August low to trade off of. CNA, financial services, and that is it. So again, let me go back to my favorite technical indicator, the percent of stocks above their 50-day moving averages. Again, the thesis here is that the market is now trying to bottom. Maybe it's already bottomed after having been oversold for just one day. For those of you who follow my blog, you know in my trading rules and the data that I've analyzed over the years that oversold periods typically do not last long, particularly if we are still in a bull market. We don't expect oversold periods to last that long. So a bounce is not just inevitable, but imminent, an oversold bounce. Now, if we're in a bear market, then oversold periods can drag on and on. And I've been in those, and in my analysis, I show what a bear market oversold period looks like. They can be very painful, and risk management becomes so important through those periods. So hopefully this was helpful. Again, Swingtradebot is a great tool for scanning to find particular patterns. There's all sorts of things you can do in there. You can see the filter that I showed earlier. There's lots of stuff to take a look at. Oh, and let's just finish off with looking at what happened with the NASDAQ. The NASDAQ didn't quite qualify for a hammer. But it may be bottoming too. And small caps are interesting because they had a solid day. It gapped up from yesterday's awful day and held on to pretty much a 1% gain. So this could be a bottom in the making as well because it trapped a lot of folks who were very overly bearish yesterday. So as always, remember there are no guarantees. Stick to your own trading strategies and risk tolerance. Keep your tight stop and keep your stops tight And remember, we've only just completed the second of the three most dangerous months of the year. October is the last of those, meaning these August, September, October are the 3 months that tend to have the biggest drawdowns of the year. We've seen that now in August. We saw that even worse in September, and brace yourself for October. So in other words, assuming we do get a bounce here for the oversold bounce, look to take some profits and then brace for the next dip. Until the next time, take it easy and check out the blog, drdura.com/122. Subscribe there and subscribe to this YouTube channel. Take it easy.